Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you're all having a great day. I'm the Vortex Trader, and today we are going to be having a look at GBPUSD on the 4-hour time frame to try and make sense out of what we are seeing with this pair currently. We're also going to be discussing the concept of a false breakout, or otherwise known as a fake out. So please remember to hit that like and subscribe button, and let's get into this chart. Right, what are we seeing? Well, we know if we pull the screen back, this is on the left-hand side of your screen. You can see the daily time frame. Nothing but bearish movement. We know this in the equity markets. We see this everywhere. It's affecting Forex as well. Markets are currently tumbling, right? Except for the DXY, which is the US dollar index. That is still pushing up towards trying to break current highs, but this is not what today's video is about. Let's jump into this chart. So we see nothing but bearish movement. Let's take away this descending channel and look at this. This is what I want to discuss, right? The concept of a fake out. So what are we looking at? We're seeing price coming down quite impulsively, right? Making a low, coming back up and retesting this same point over here, right? Which is a resistance line right here. It comes back up again to retest it, comes back down, forming some sort of support level over the next few taps, right? So some of you may be asking, why have I not brought the support line down here? Right? Now, this is true looking back in hindsight, because we can see that once price broke below this support line, it did come back up to retest it before carrying on lower. But at this time, when price was at this stage, we would not know that this would have happened, right? We didn't know. So I like to bring this back up to see a more clearer view of where price was bouncing in between which levels. And these levels right here show me that price was bouncing between this resistance line up here and support right along here. And these few taps here verify this support level. Okay? Okay. Now, what are we waiting for after we see price bouncing between these levels? Eventually, markets break out of consolidation. Yes, markets can only move sideways for so long before moving up or down. So this is what we are waiting for. Now, what do we like to see when we have a breakout? We like to have a confirmation with strong volume. Now we see this right here. We have a big, strong bullish bar of volume to accompany this large bullish impulsive candle. Yes, which closed above this resistance line quite clearly. So we are thinking this is a time for us to go long. Yes, we could put a position like this. Our entry could have been upon the retrace of this resistance line, just like this, something like this, and we would have watched this pair come back, retest the top of the resistance before carrying on further. But this was a clear example of a fake out. Why? Because although we had price break above with strong volume, then what happened? Came all the way back in, broke below, and carried on lower. This is what we call a bull trap. Now, bull traps can be very difficult to identify on the chart. Okay, but how do they actually play out, right? What actually happens? We have a ton of bullish volume. This means that there is a lot of bulls buying this pair right here in this candle. And when the candle closes, there aren't that many bulls left. So the fact that we see a small bearish bar of bearish volume on the next candle, bulls still think there is a very strong chance that price can continue upwards. But the truth is that most of the bulls have already been bought. All their positions are bought up, right? There's not enough buying power left from the bull side. Therefore, it doesn't take a lot of bears to push this price down. And that is exactly what happened. We can see that with the volume, there weren't a lot of sellers. All the bulls have already been bought up, right? There's no more bulls left. Yes, we see this with this large bar of volume. we see it. They're gone, right? So it won't take a lot of bears to come in and push this price down. And we can see that price came back into this channel, this parallel channel, and pushed the price down. And we eventually broke below. If we push our support line down, we can see we broke below this line right here. And now we have the bears coming in. We could have done something like this, depending where you would have put your stop, because we would have waited for a retrace to the bottom of the support level, which we got perfectly touched. And then we would have entered into a short position. So this is just the way that markets work, right? Up, down, trending, sideways, right? But we have to be aware. So this trade, had we taken it, this false breakout, it would have been counter trend, because we know we've seen nothing but bearish movement. So a very small position would have been correct if you allocated that to a trade like that, right? Because it is counter trend. So you aren't trading on the right side of the markets with something like that. And had it been a very small lot size and you risk very small amount, it would have been okay, right? When it broke down this side and you did the same thing, you would have been on the right side of the market and your trade would have worked out well. So this is how we identify or see how fake outs actually work. Let's put this descending channel back in. What am I looking for at the moment? Right. We can see price is clearly still moving downwards. Now I have a position set up here which is clearly counter trend. Why? Because I'm looking at buying this pair. Should price come back into this yellow zone, I will be buying it and sort of doing a 4-hour scalp with trying to get a 1 to 4 risk to reward. The only reason I'm looking at something like this is because of this large bullish candle we had here, which closed above all this previous price structure right over here. So I will be risking a very small lot size, and I will only be entering this long position if price comes back into the zone with very, very low amounts of volume. Okay, I will be watching it like a hawk. Okay, my alerts are set up. If volume increases with these current candles here, I will not be taking that position. All right, because I do not want to get myself into a predicament where the bears are pushing, and I'm on the wrong side of the market, being the only bull trying to buy this thing. Okay, so this is definitely one to watch. And that'll conclude today's video. I hope you all understand the concept of a fake out. If you don't, or you have any questions whatsoever, please leave them in the comments below. I will be sure to answer them. Please check the link for our website and our social media profiles in the description below. As always, I hope you have a great Tuesday. Thank you very much for watching. Please remember to hit that like and subscribe button on your way out. And I will be seeing you all on the next one. Thanks for watching. Bye.